capital markets have entered a new phase of development, building on decades of rapid evolution. Over the past 30 years, the market has progressed through distinct phases, from the foundational digitization of trading in the 1990s to broad-based growth and product expansion in the 2010s, and now into an emerging era that we might call Capital Markets 3.0. The latest phase is characterized by greater institutional participation, deeper global integration, and the rise of new platforms and instruments that are reshaping how capital is raised and traded. Hello, everyone. You are listening to Industry Wired Conversations, your front row seat to founder journeys, leadership insights, and the real stories behind how industries run. Now, India's capital market, which is currently valued at over $3 trillion, ranks among the top five globally, reflecting significant financial development. Let's welcome Rohit Aggarwal, founder and CIO at RO Fund Management, to discuss India's stand in the evolving market landscape and long-term investment opportunity. Hi, Rohit. A very warm welcome to our podcast today.
Good morning. Thank you for having me.
Great. So, Rohit, I think when we talk about India's role in the overall financial development, we might have a lot of debates going around that because some leaders have a different perspective towards India's role and growth. Some still think that, we are still lagging behind in terms of our competing developed countries. But I think we are going to discuss a lot about it in our discussion today. So, before that, let's tell our listeners more about RO Fund Management, its specialization. And we would also like to know more about you, Rohit. How has the journey been till date, and what is your role at the company today?
Sure, thank you. I've been a active investor in the Indian capital markets for 30 plus years. I started my personal investment journey with a very large international investment bank called Oppenheimer and Company in the mid 90s and early 2000s. Oppenheimer was probably one of the largest foreign investors in India with over $1 billion committed exclusively to India, going back that far. We had both a private equity portfolio as well as a public equity fund dedicated for India. It was my first forte into the Indian capital markets. I spent 12 years with them. I left them as an executive director of the bank and started my own hedge fund firm in the mid 2000s in New York called RAS Capital. RAS became a platform for foreign investors to access India. If you think about a typical international family office that's excited about India, they would probably dedicate, between 1 and 3% of their portfolio to India, which is a very small percentage for them to really discover India, understand the complex nature of its economy and sectors to invest in. And so we became the one-stop shop for them to access large, mid, and small cap stocks and other arbitrage opportunities in the futures and options market in India. And after selling that business in around 2012, I had moved back to India. I continued to actively invest in India. And more recently, I saw a very good opportunity to launch a alternate investment fund, which is a SEBI-approved structure. It is an AIF Cap 3 structure. And that's where RO Fund Management was established a few months ago. We have launched our first fund called the Rose Stars of India Fund. This is a equity long fund combined with arbitrage strategies. I think one of the very important things that we talk about in our pitch is the importance of understanding risk-adjusted returns. I often see people discuss and say, last year this was my performance, and somebody else says, well, my number was X and your number was Y, and therefore I outperformed you. Well, that's not necessarily true. What people need to understand is unit risk taken for unit return, or the concept of risk-adjusted returns. So what we have done is we pretty much target the entire investable universe of stocks, which is roughly about 1,000 stocks in India, listed companies, across large, small, and mid caps. We obviously cherry pick some of the best performing companies within the 1,000 company universe. We run a very concentrated portfolio of 28 to 32 investments in these stocks. And we combine that with arbitrage strategies. And for people who aren't aware of that, as arbitrage strategies are investment strategies within the futures and options space. We run an absolute strategy wherein we take no directional risk of the market. We are simply capturing the inefficiencies in the futures and options space and combining that with taking more risk on investing on the equity sides. And this combination of strategy between being long only on equities and combining that with market neutral strategies and arbitrage is what gives us over time a superior risk adjusted return. During the 2000s, early into 2012 and 13, this is exactly what I did offshore for bringing in foreign capital, and it worked really well. And I think 10 years later, the market in India is much larger and deeper, and the opportunity is even greater to pursue the strategy once again.
Thank you for that great overview, Rohit, about RO fund management and also about your role. And we are really glad to understand the vision behind the company and the role that drives its innovation. Okay, so with that foundation set in place, the Indian capital market has seen a significant transformation in the past 5 years, driven by a shift in household savings behavior or rapid digitization and even strong macroeconomic resilience. These changes are not just short-term trends, but fundamental shifts underpinning a new era for the market. So, if I wanted to ask you India's position in the global landscape today, how would you assess that, and what makes India an attractive long-term investment opportunity?
We're in one of the most exciting times for India. I think India in the recent few months has shown strong resilience with the West Asia war specifically. We were probably one of the most disadvantaged countries with the West Asia war coming around us, with the high dependence of energy and soaring energy costs. We import 85% of our oil and LNG needs, 50% of our LNG needs. And that put a lot of pressure on our economy, on our currency. Having said that, what we have already starting to see as this war is coming to an end, hopefully, is a reversal of all that. So while there may be some short-term pain from this, India remains the world's fastest growing country. This has been for the last couple of years, and we foresee this for the next 5 to 10 years with a GDP close to 7%. And I think we could probably push that to 7.5 to 8% in the next 2 or 3 years. I think India remains a very strong growth story. The more exciting thing to think about is while we're in Modi 3.0 government now, which is shown to be extremely stable, extremely progressive, reacting to global geopolitical situations very quickly, providing solutions for companies that may be under stress across sectors, being very open minded and a good listener to what the needs of the industries are. At the same time, the important part to understand is when we compare India to some of the other economies around the world, which are right now in the forefront, like Korea, Taiwan, China. Basically, we have hot money chasing some of these areas. However, when you look at closely, Korea is made up of 2 or 3 stocks. Taiwan is made up of a handful of stocks. And everybody is chasing the hot space of AI. While India may not have that at the current time, in the way that some of these foreign investors are excited about. We will ultimately, in the next 5, 7 years, become part of that ecosystem, whether it's through data centers, whether it's through, the upgradation of some of the traditional IT service companies in India, which are very large and very cash rich, and I think will retool themselves to be part of the global AI ecosystem. I think the important thing to understand with India is that this is a very broad-based economy with at least 8 or 10 sectors being very, very exciting, which also provides a hedge against any one sector slowing down or falling off the cliff. So within our portfolio, for example, some of the sectors that we have that we're very, very excited about is the banking and financial sector, which is very broad-based. We talk about private and public sector traditional banks. Then we have the non-banking financial sector. We also have sectors like insurance, brokerage, And, when you think about some of the statistics, home loans to GDP in India is a single digit number right now at about 5%. When you compare that to developed economies of the West, like the United States, home loans to GDP is 50% or more like 55%. So you can just imagine the potential of growth of some of these sectors. Same with insurance, same with brokerage and asset management companies. The participation of Indians in asset management and equities is extremely low, in single digits in India. People still look at equities in general as gambling, not as a true investment strategy. And this mindset will change over time as people get more educated about financial markets, and we will see these numbers explode. So the long-term growth story of India remains very intact. It's broad-based, unlike a lot of other economies that we see around the world. And we're very, very bullish on India for the next 10 to 15 years.
Those are some valuable insights, Rohit, and it's encouraging to see how India's economic story is evolving beyond just short-term gains to become a more long-term structural opportunity. And again, various factors like the domestic consumption, digital transformation, and the infrastructure development overall are creating a foundation that continue to attract global investors. And again, at the same time, India's resilience in navigating the global uncertainties has reinforced its position as one of the most promising investment destinations in the world. And I think that's particularly interesting is that we are not just witnessing an economic expansion, but we are kind of seeing a transformation in the way people are investing, how businesses are innovating, and competing on a global stage. Great. With that being said, Rohit, you mentioned about artificial intelligence, and I think when we talk about the financial markets or investing in the financial markets, it can be a daunting task for a lot of people. It's because, you have to consider countless variables, and making a well-informed investment decision is very crucial to achieve those long-term strong returns. Now, gone are the days when investment decisions relied solely on intuition and experience, or what does your gut feel like? Because now we have, big data and advanced analytics technologies. So investors now have access to unprecedented amounts of information that can help them make the right investment decisions and strategies. In today's world, how important are data-backed investment strategies, and it's helping investors make more informed decisions?
Sure. So, one of the things that investors need to understand that money management is a professional business. It's very, very time consuming, very research consuming, very information consuming, and the world has become a very small place. So the movement of information, whether it's geopolitical events, news events to do with specific companies, sectors, global events that can affect currencies, commodity prices, etc., moves in seconds. And for a retail investor or even in a sophisticated investor that has a full-time job, that has a full-time business to run, it's very difficult for them to compete with a professional money manager that is actively managing a portfolio, because that is what they do full-time for a living, with a team of sophisticated people that are experts in research, experts in operations, experts in trading. So I'm a big proponent of relying on professional money managers to manage your money. Now, within that space, of course, there are many, many options, mutual funds, alternate investment funds like we are, PMS accounts, and many, many other options, right? I think to your question specifically, I can't emphasize the importance of well-researched companies backed by proper data, having the ability to study those, get on the phone with companies, understand their CFOs, understand where they're going, the issues they're facing, whether it be their inputs, whether it be pricing, whether it be competition, to have a very detailed understanding of where individual companies, where their minds are, understanding the whole sector. So all of this is very data driven, and having the resources firstly, to get access to that data, and then the analytical ability around it is very, very important. And it's very difficult for a retail investor to compete with institutional investors in this world. The only thing that's happened is that data has become probably cheaper and widespread, and a lot of it is also free. So it allows perhaps people to get access to that data today. But then just looking at raw data doesn't mean anything. You have to be able to spend time to access, to analyze that in a professional way to be able to compete with people who are doing that. So I hope that sort of gives you some clarity on that, on your question.
Absolutely, Rohit. And I think, again, data has become one of the most valuable assets when we talk about investing. I think it's because, the access to insights is kind of changing the entire ball game and helping investors evaluate opportunities or even risks with greater confidence and objectivity. And but at the same time, it's equally important to understand that data is only as valuable as the strategy behind interpreting it. Because again, combining your data driven insights with a sound financial judgment is very important, as then you can have a more balanced decision making in terms of investment. Okay. So that brings us to the another aspect of our conversation today, Rohit. Now, the dream of building lasting wealth often hinges on one crucial principle, that is long-term investing. It's not about quick wins or chasing the latest market buzz. It's about identifying companies that have the resilience, innovation, and the fundamental strength to thrive for years, even decades to come. But in a world brimming with financial data and conflicting advice, how does an individual investor cut through the noise and spot these true long-term gems? So, what characteristics do you look when identifying for companies and sectors with long-term growth potential?
Absolutely. That's a great question. So there's two parts to it. Firstly, I would say one of the most important decisions for an individual, for a family in planning long-term wealth management is asset allocation. And what I mean by that is the very broad picture. So everybody needs to sit down as a family, sit down with their CFO, sit down with other family members, and really understand what are their long-term goals, right? And that will drive them to build an asset allocation model for themselves, which could be a combination of fixed income, equities, commodities, real estate, and alternate investments like private equity, venture capital, startup, et cetera, et cetera. Building that model out upfront is very, very important. And that's part one. From there, when you move on to specific area of equities, which is where I'm focused on, to your question specifically, how do you really evaluate equities and how do you build a portfolio from there? So one of the very important things is, as a firm, we are highly disciplined in our parameters, finding hidden jewels, if you will, within the equity universe. Like I said, our goal is to provide, we're a flexi cap fund, which means that we are very dynamic between large caps, mid cap stocks, and small cap stocks. We cover the entire investable universe of roughly 1,000 companies. And within that, we want to make high conviction bets, sort of roughly about 30 companies across large, mid, and small caps. Having said that, what we do is we are, at the end of the day, a bottom up stock picker. So we will screen these companies for growth. We're very focused on EPS growth. We need to see in mid and large caps companies growing at 20-25% or north of that. We need to find large cap companies that are growing in low teens to mid teens, outperforming the benchmark index of large cap. And then we combine those positions to create a portfolio that's well balanced across industry sectors, that's well balanced across valuations. There are certain sectors in India where the valuations are very high. There are other sectors which are lower. We need to combine that, whether it's, for example, FMCG and pharma, which tend to have lower PE multiples, combining it with, let's say, defense companies and high growth companies in infrastructure space, where you will see higher PE multiples for that sector. Putting all that together is really a skill set that we provide in our portfolio that gives a investor a balanced portfolio across sectors, across P multiples, and balances the beta at the end of the day of the portfolio, where we hope to outperform, the fund hopes to outperform the benchmark index of the BSC 500 as well as the Nifty, and we try to generate alpha on that of at least 300 to 400 basis points a year, which will ultimately give you a very long-term strong growth story in the portfolio with returns in the mid to high teens net of fees to the investor.
Thank you, Rohit, for that valuable perspective. And, especially because long-term investing today goes far beyond just looking at the revenue numbers or mere market valuation. I think it requires an understanding of broader structural trends, the pace of innovation, management quality, and how businesses and organizations position themselves to stay relevant over the next decade, and not just the next quarter. So, again, with the emerging technologies like AI and digital transformation, gaining a lot of momentum, distinguishing between this short-term momentum and sustainable growth has become very important. And again, for investors, having a framework to identify such opportunities can make all the difference in building their resilient portfolios.
Yeah, if I can just add a few things to that,
Sure.
you're absolutely right. I think that while we're bottom-up stock pickers, I think what we're very conscious of is long-term thematic ideas, right? So let's talk about, for example, the energy space, right?
Yeah.
Um, we have been primarily a traditional energy producer, and we're moving now to, or we've been trying to move some of our energy production to renewables, still very small as a percentage of the overall energy pie, right? Now, the energy needs of India, both for industry consumption as well as the upcoming data centers that are planned in India over the next 5, 10 years, is going to be so huge that by 2030, we almost need to double our energy production, right? And that's a huge challenge for India. So when we talk about energy as a theme, I'm talking about the entire ecosystem from production to transmission to the equipment around energy, all of it, the entire ecosystem is a phenomenal opportunity, right? And if you really think about the backbone of a country growing at this speed, you can't not be producing energy and growing this entire system at the rate that we need to sustain the overall GDP growth of the country. It's really a backbone to the entire performance of the economy. So I think that is a very big theme for us. And within that theme, of course, we're looking for companies in different areas of the energy ecosystem that will support this theme. Another very important theme, if you live in India, if you live in Mumbai, if you live in Delhi, even the second tier cities, you feel this sort of sense of energy with individuals, especially Gen Z consumers, right? Consumer discretionary spending is on the rise today, right? You look at Gen Z and they want to go to concerts, they want to go to movies, they want to go out, they want to travel in India, they want to see the mountains, they want to see the beaches of India, they want to go for health spas, try different hotels, spiritual trips. All of it is a very big change in the mindset of the Indian consumer, right? Traditionally, people would say, high savings rate, let's buy gold and silver, let's buy jewelry. The younger generation is saying, well, okay, maybe we'll do a little bit of that, but what we need to do is enjoy our life. We need to spend. We need to also open demat accounts if we don't have it. So, the change in consumer behavior in India is visible. They want to eat out at restaurants, right? You go to Bandra and North Mumbai, for example, and whether any day of the week, restaurants, bars, full of people. I wonder if even people cooking in the house anymore, right? You have dual working spouses probably eating out 3, 4 days a week, right? Because they don't have time to come home and probably make a meal, so they're just eating out. So the spending habits is changing. Consumer discretionary spending is a huge theme for us. And then the third largest theme for us, really, from a macro picture, is like I touched on earlier is the entire BFSI space, right? When you talk about brokerage companies, when you talk about insurance, when you talk about home loans, when you compare it to global standards and global metrics, we're still very nascent in that economic cycle. So these numbers need to grow 5x, 10x from where we are today as we are moving from a emerging economy into a developed economy and crossing that path. You will see what seems to be areas where we're just scratching the surface. Those numbers start becoming more meaningful. So the opportunity again is huge in terms of these three sectors that I talked about.
Well, I completely agree with you, Rohit, and I think you shared the kind of behavioral shift and change I think that's taking place. I'm sure not just in India, but all over the world, and it is specifically being witnessed post the COVID-19 pandemic because everything has been becoming so more accessible to everyone out there that people just want to leverage and enjoy the benefits that they are getting while they can sustain. And I think that's kind of changing how they are making their investment decisions as well. And with
That's right.
that being said, Rohit, one last question for you would be, if an investor could only focus on one theme shaping India's economic future over the next 10 years, what would it be and why?
I think that's a very difficult question because I think, like I said earlier, there are some very, very strong themes.
Mm-hmm.
But within that, if you really force me to pick one, I think I would bet my money on energy. I think that the energy needs for India are huge. I think we've learned our lesson through the West Asia War on being over dependent on oil in general and oil import for our energy needs, especially. And I think that post this, there's going to be a big push from the government to speed up the renewable side of production for energy. We're going to find better alternative sources that are cleaner, that are faster to produce, and that we can produce in India. And I think that the opportunity for that is huge. And like I said, I really look at we can't really succeed without our energy needs automatically growing, and therefore energy production growing. And therefore, I think that is probably one of the strongest themes for me in the overall growth of the India story.
Thank you, Rohit. And I guess to wrap up our conversation today, the Indian capital market is undergoing significant structural changes that offer potential for further development. With capital formation accelerating and a broader investor base than ever, the market is becoming more inclusive and resilient. Thank you so much, Rohit, for being here on a podcast today and giving us some deep insights about the India's capital market boom, how it is not a fleeting phenomena, but a reflection of deep seated structural shifts that continue to drive its expansion. And as we look ahead, these trends bode well for a stable, growing, and democratized market, one that is increasingly aligned with the aspiration of its investors and the needs of a growing economy. Thank you so much for your insights, Rohit. It was wonderful talking to you.
Thank you so much.
Great. So, this is for listeners. I hope you enjoyed today's discussion and gained some insights around the India's capital market, how the entire landscape is changing. Of course, what are certain things to keep in mind while investing. And also, just remember that investing in enduring businesses is like planting a seed and watching it grow. It takes time, but the rewards can be truly transformative. Stay tuned for upcoming episodes, and you can view all our previous episodes on Spotify, SoundCloud, and YouTube. Thank you so much.